I'm Alan Kenny, Editorial Director with REIT.com, and joining me today is Doug Donatelli, Founder, CEO, and Chairman of First Potomac Realty Trust, which recently announced plans to transition to an office REIT. So Doug, can you tell us what prompted this move?
We've been making a transition over the last few years. When we started out as a public company, as a public REIT, we were really focused more on industrial properties with some office in the mix. Our focus is really on the greater Washington metropolitan area, and as you know, Washington really is much more of an office town than it is an industrial town. So as we are looking around at our opportunities, we thought we had a much better opportunity to grow our company by focusing more on office. So we've recently decided to sell our industrial portfolio, which consists of a little bit more than 4 million square feet of space.
And give us an idea, what kind of challenges does that involve, and how are you really trying to address those?
Well, we've addressed a lot of the challenges of shifting over to office over the last few years. We've grown our office portfolio pretty substantially over the last 3 years or so, and that has become the largest component of our overall portfolio, certainly from a revenue standpoint and from a square footage standpoint also. So really the industrial portfolio that we have has become a smaller and smaller component of what we've owned. And I think it somewhat muddled our message. So really by selling the industrial, I think that's going to clarify things for investors. It definitely clarifies things for the market in DC, and I think as we deal with tenants in the marketplace and brokers, having a clearer, more focused story is going to make a lot of sense for us.
And living here in Washington, I hear a lot about concerns among employers here, possibly cutting back with the idea of government spending potentially being pulled in. Can you give us an idea, what is that doing to the fundamentals in the office market here? Well,
the office market fundamentals are not nearly as strong as they've been in the past. We've been through slowdowns in Washington before. I've been in this town all my life, so we've seen slowdowns in the past, and this is a pretty substantial slowdown by DC standards. That said, last year the greater Washington metropolitan area had positive job growth, slower positive job growth than we've had in the past, but certainly not recessionary times. We have seen a shift in the way tenants are using space, so that we're seeing tenants becoming much more efficient in the way they use office space. So that has led to an overall decline in demand, but the demand really has been for specific kinds of properties. Newer properties, better, more efficient buildings. Green buildings are very popular in the market today, and the demand for properties, the buildings that are located in strong transportation hubs as well as in amenity-rich submarkets, those are all things that I think we can take advantage of. So even if the demand stays relatively muted for the next couple of years, that shift and that flight to quality plays really well in our hands as we take advantage of the portfolio we've already built and then continue to build out our portfolio and grow.
And you've been pretty busy, not just with this refocus, but also on the acquisitions front. Mm-hmm. Can we expect more activity like that going forward this year? Yeah,
I mean, I think that's our goal. Our primary goal is to get the industrial portfolio sold at a good price and as efficiently as we can. I'd like to get that closed in the second quarter and then really turn our attention towards acquisitions as we get later into the year. I think our primary push is to get the portfolio sold, strengthen our balance sheet as a result of that sale, and then move towards growth again and move towards acquisitions.
All right, sounds like you've got a lot going on there. Thanks a lot for filling us in, Doug.
Sure, thanks, Alan.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.